Welcome back. My name is Dr. George Mochocki. This is Marketing 106. I almost forgot I had another class I'm teaching sports marketing. This is retail merchandising 106, and we're going to be talking about this is what do you call it? Merchandising, retail merchandising, and we're going to be talking about financial aspect of retail merchandising. Um, and this is offered by Harper College, either online, a blended class you're taking me for, a face-to-face class. Okay, so we went through the material already, so this is going to be like a quick overview. I understand the majority of the students in this particular class, retail merchandising, had no accounting, very little exposure to any kind of business classes. So I'm just going to right now not go, I'm going to go into some very light detail, very high level, just so you at least are familiar with some of the terms and concepts that you need to know when you're going to be running your own business as a small shop owner, retail owner, or you're going to be a department head in a retail store. You already could kind of work on a income statement. So this is going to be another refresher. I made you do it a little bit earlier when we were doing the pricing for your goods, so it kind of ties in. Remember, this is I think the first semester I'm utilizing this book, so I'm kind of working along with it. All right, so here's what we have. We're going to talk about finance from a retail merchandising perspective at a very high level. I'm just going to gloss over it. We talked about this in class, and so okay, so let me just go in here, and I'm going to open this up at let's see, at a 200. And the book does a real nice job explaining it to it. It's still a little bit confusing if you never had any kind of accounting or anything else, because I think the majority of my students are in the fashion area. Okay, so financial management part one. Okay, so retail specifics, dollar and unit. When you're looking at it from your business operation, every item is going to have a dollar cost, and then you control that item, and part of it is what you paid for it in the income statement. This is cost of goods that I purchase, and what I sell it to my consumer, or the end user, for lack of better words. Okay, so retail specific, which products are purchased, and when you purchase, and how many. And later on we're going to talk about LIFO, FIFO, first in, last out, first in, last out, or last in and first out. All right. So when I look at LIFO, FIFO, accounting concept, and all that does is how I charge off on my expenses, which one gives me a better advantage, so I don't have to pay the taxes. I still pay taxes, but it's more favorable for me. And remember, I'm just explaining the term, so if you hear it, they're not talking about a dog, they're talking about LIFO or FIFO. Okay? All right. Now, the dollar control. You have to be able to control and monitoring how much money you're spending and how much money's coming in, just like you do on your paycheck. I know I get this much of a paycheck, I get so many bills. What do I do? Do I go for extended credit, or do I use a credit card that you shouldn't, or I have a line of credit? So you're controlling the dollar. Now the unit control is how many units you need to keep your business functional. If I'm having a hot dog stand and I run out of hot dogs, hey, we don't have any hot dogs, or we have some tamales, or we have some hamburger, I came in for a hot dog. You're going to lose your customers, and you have to be able to control that. Either you're going to talk about through a buy through or a sell through, or you have to control that by a weekly supply. You got to have those units. And how much it's going to cost me. If I run out, I'm going to pay a little bit higher because I need them shipped to me right away. If I could plan adequately, I already have just enough units and a little safety stock in case I had more customers. I don't want more customers, but I want to have more units than I'm going to be able to utilize. And that's what we call how many turns of my inventory. It's a ratio. And usually it's looked at the year end, but here we're going to look at it for a week, weekly or monthly, or what they call sell through. Okay? Now, financial management part two, again, four aspects are going to be covered: methods of accounting, inventory evaluation. You got to evaluate your inventory. You don't have too much or too little, because if you have too much, it could be obsolete, it could get broken, it could get sold. You've already got money tied in that you're not making any money on that until you sell it. Forecasting and budgeting, just like you do. You budget how much money you're going to need for next week. I know I got taxes coming up in a few months. Not the income tax, anything else is basically for property only taxes. So I have to have the money already set up. So when the government wants the taxes, they want it there, and I have that already ahead of them. So I'm already budgeting and forecasting for something. If you know you have a new sale or something else, good weather or anything else, you'll budget the money. A lot of people budgeted their money for the income tax return. A lot of people are getting income tax because of the Trump administration. He reduced the taxes, and by reducing the taxes, I have more money in my pocket now instead of waiting to the year end. So that means I don't get as much back because he hasn't been taxing, hasn't been taking that money out. The government has been taking them out. So a lot of people look at it. So wait a minute, I was expecting $3,000, only got $300. What's this Trump's income tax return? Because you didn't adjust your forecast. When he gave you the deductions and the reduction in the taxes, it means every paycheck I have maybe $10, $15 more that would have went to my taxes, but now I have it to spend it. So when it comes at the end, I don't have that money there because he didn't take out as much because the tax is reduced and the government already adjusted your pay. You just didn't adjust it on your side on your budget. You see how finance is interesting and fun? All right. So when you look at the Trump administration, you did get the taxes, but in small increment. And at the year end, when you were getting the money back, it's basically is the money that you gave to the government, you overpaid them, and now they're giving it back to you without no interest. Come on. So finance, when you take me for finance, it'll get a little bit more. You'll take a couple of accounting classes. And accounting is kind of, it's not hard, it's very detail. For a small business, if you open up your business and you haven't had a chance for accounting, try to take at least one class in QuickBooks. QuickBooks is something easier, and for a small business, it does a lot of the calculations and setting up for you once you get it set up through your accountant. Okay, and then financial inventory control. How much got lost? How much I got over? Do I have too much? And the first year is the hardest because you don't really know what happens because your business goes through a cycle. You know, summertime I'm going to if I'm selling swim or I'm a pool place. When I say pool, like Poolorama or some of these other things, American Pool stores, what do? Most of their money is during the summer. People are buying pool stuff, chemicals, and everything. In the wintertime, they still sell other stuff, like maybe grills or something else, but the business isn't there because people don't go there for the winter, but they still go there and buy other stuff. You know what I mean? So your cycle is going to be different. So I got to have the inventory more in the summer. In the wintertime, I kind of put it away, what I got left, to try to close it out. If I think it's going to get stale, or it's going to be outdated, or it's going to be damaged, I got to keep it someplace. I got to store it if I don't have it. It may be better for me to sell it at a discount, get rid of it, and bring new stuff next summer, and because I don't have the space to store it, or I rent one of those storage places. That's a cost, and that cost has to be part of my inventory. Okay, and different needs. Okay, assortment. Retailers are different than manufacturers. Some manufacturers ship stuff and also work with customers. But remember, as a retailer, I got stuff. I got, as we talked before, higher sales. Sales are more frequent. They're monthly, not quarterly. And hardware, hardware. And I think the book used that for that. So I'm not going to go into this now. I'm just overviewing. Read the book, read the chapter, and all I'm doing is planting the seeds and giving you some familiarity of the concepts without getting too much into detail to really get you confused. This is, for many of you, your first exposure to any kind of finance. Okay, benefits of financial merchandising. You got value of the inventory, as we talked. Open to buy, you got stuff ready to buy. You got inventory investment. That's good. I got to buy my inventory 6 months in advance. I don't make any money until I sell it. It's like a farmer. He has to buy his or her seeds, plant it, and he's got to wait the whole season before he actually reaps or gets his yield. And then he got to ship it to the warehouse. What if it's a dry summer? I got to spend more money, my variable costs on water. What if it's too much rain, or I need more fertilizer, or whatever? You see what I mean? So your inventory investment, you want to make sure you have enough inventory, but at the right time and just enough where I could satisfy my needs, but I don't get stuck with the old stuff. And retail space, you only got so much space. The inventory comes in. If you got a space, you don't have a storage, where are you going to put it? So a lot of times you have it shipped maybe a few weeks ahead of time, but you're paying a little bit more. If you buy it earlier, then you get better discounts and everything else. Remember, in finance and everything else, from a manufacturer, I'll give you discounts if you buy the stuff and utilize it now. And there's trade discounts, there's new business, there's a lot of different discounts, more than you think. Just like when you're using coupons, me as a manufacturer, supplier, or as a book called The Sourcer, the source of bringing what's my source of my inventory, the more I could sell now and move it, because now I have space to build more or stack more, and then you're taking inventory, so I already could pay my bills. You see how that works? It's all right, I'll leave it at that. Okay, benefits of a financial merchandise plan. Again, here, buyer's performance is rated. You, as a department head, if you're working for a chain of retail stores, they're looking how much sales you did last year, and you say, "Well, I didn't make the quota." Well, hey, oh, what's wrong? Maybe the merchandise is wrong. Maybe the customers change. You're responsible, just like if you're owning your own business. I'm looking at last year. This year, you're just kind of figure it out. Which months are my good month, which months I should have the inventory. So it's a hit and miss, which is fine. So don't buy too much, but don't buy too little. After a while, you'll have that feeling. If you're in the business, or if you work someone in the same retail operation, now you open up your own, you kind of understand from their past practice, if you're involved in it because they help you. They say, hey, you're assistant manager, and now you open up your own store. You already know this stuff. You know how the customers buy. You know the cost, the consumers' behavior. When they buy or not. Right now, a lot of people were expecting the big bump in April, but because of the tax law, that bump wasn't there because they don't have a smaller check, so they're not buying as much. But now they're beginning to realize to adjust their things. So now maybe you spread out that across. You adjust your budget to spread that out across the rest of the year because they'll have more disposable income on a bi-weekly or weekly or monthly basis, other than all at the end. Okay, and stock shortage are determined. Slow moving items you classify. They're small, you put them in clearance, or you don't give them right in the front, you put them away in the back. They're moving, and then later on you say, hey, when we do the purging, maybe I'll get rid of it. And balance between inventory and out of stock. You gotta have a safety stock, but you don't want to always be out of stock. Some stores I go into, and they're always out of the problem. And we're not going to harp on the Home Depot exert, but trust me, I go in there. They never have I want. I should have went to Menard. I should have went to Lowe's, even though Lowe's having some problem. Because they have what I want. I may just want one thing, but it might be something else. But if I make the trip and they don't have the one thing, I said, what a waste of trip. I would have figured that time that I came in economically and they didn't have it, most of the time they don't have it. They don't have it out of stock, or I got to call somebody, I got to wait. That time that I waited there to get it done, or my time driving there and then finally going back to another store, I'll say, hey, just eliminate that. Just go to the other store. They always have it. Maybe it's a little bit further, but that's 15, 20 minutes a longer drive. But that 15, 20 minutes, it took me half an hour to come here, and then I'm frustrated and stressed out. You have to understand that's a balance. Okay, now inventory systems, real quickly, and I'll call this. The ones we talked about, the class, is accounting systems could be complex. You have cost accounting and you have retail. Cost accounting values merchandise plus the inbound transportation. You put it all that, and that's how your inventory already has that in there. Remember, it's software that does it. You don't have to do it by hand. You just have to set it up. Retail accounting is basically values merchandise at the current retail prices. It depends what system. You're still going to have to subtract the expense or the cost of the inventory. It's how you set it up now. What makes sense to you? Are you looking at just at the sale, or you want the sale, or you want what do you call it, the value of the merchandise, not what I sold it for? It's what you're used to. You have that flexibility, but you have to be consistent across the year, so you know if you up and down. You know where to look for. Okay. Now they had this. Now this is just a statement, and this is in the book. I'm not going to go into it. It's just an example of a hardware store, and they do more category. I got so much nut. I'm not going to do every nut. Even though I ordered, I do it in a category. I group it. That's how I do my inventory. And it says, okay, stainless steel nut, bolts, all different sizes. They're not selling, so I put them off to the side. Maybe they want more galvanized bolts to sell. And so now I had the stainless steel, anything stainless steel, in a smaller area at a higher cost. Because it's the demand, you want it, I got it here, but I got, because it's not that I'm trying to rip off the customer. That's not the thing. I'm a business person. I got to keep that inventory. I'm not making any money. It's taking up the space on the shelf. Okay, all right. So and we discussed that, and you worked on that, and again, profit and loss, or what they call an income statement. They all tell you use profit and loss. Fine, leave it on that. That's what income, how much I made, and how much, your income, your W-2 is your profit and loss statement. I made this, how much a deduction? Do I got to pay Uncle Sam or Mrs. Sam, or do I have any money left? Okay, now physical inventory system, you have to look at the ending inventory, your gross profit, all right? And we talked about that with the income statement, so I'm not going to go into detail on that. Just look at it in the book. The cost method, again, I'm just breaking it down. The cost of the retail is recorded, can be used in physical book inventory, and a lot of times, some people still use the old book. Outdated. Come on, there's software point of purchase. But we talked about software. It makes your life so much easier. Focus on the customer. Focus on that. Let technology take care. Once in a while, you got to come up and check to make sure that the numbers in the computer are actually what you have on hand. But otherwise, focus on the customer, utilize this, have the system. Some of your suppliers or vendors will help you set up the system, because as you're using your, and we'll talk a little later, UCP scanner, you write for the barcode, it already may send everything else to at the end of the day to your vendor, so he or she's sending it to you to replenish the stock. You have enough time. Hey, it takes 3 days to get here, and here's the inventory. It drops by this level. I'm already reordering automatically, but you still got to check on that, okay? And now we're going to go on LIFO and FIFO, and again, here's the figure. We talked about this. I'm not going to go into detail. Remember, LIFO first in, first out. FIFO first in, first out. LIFO last in, first out. And that's basically just on the accounting side. Don't get confused. Just understand that the terminology, what it means. Okay. Advantages to cost-based inventory, keeps the total value, so you know how much you have in inventory, how much money got wrapped up in it. So do I get rid of it? The total sales doesn't really give you that, because you have your markdowns or your theft and everything else. So more of your markdowns and everything else, your profit. And then a month inventory. Remember what I bought now. If I buy food now for this month and next month, the food prices goes up, my cost goes up because the market cost went up for that thing. Look at gasoline; it was down to $2.75 for a while, and I'm a truck driver, so that's my inventory, right? But next month the gas goes up to $3. That's my expenses went up without me doing anything else, just because the price went up. And so your inventory changes. Remember what you paid for it. Now, do you want to increase the cost to the customer? It may be a 1 month deal. You may want to not. Or if you don't increase the cost of the customer, but it's an increase to me, I'm reducing my profit margin. Okay? Okay, disadvantage of cost, require cost to be assigned to each item. It takes a little thing to set up. Once you set up, it's not that hard. And like I said, a lot of times you're not entering it. You have to actually enter it and change it. So if you're the one doing that, you may not want to go that way. Okay, and adjust inventory values to reflect style change. It doesn't tell you that, okay? And perpetual system, again, they just, here's a table, and they utilize this. I'm not going to go into that. The book did a nice job explaining it. Retail method, cost complement is closing inventory is determined by calculating the average relationship between the cost and retail value. What the hell did I say? I don't want to confuse you, but that's look, when you're responding to a lot of this cost complement below, you're just taking the average cost. When you came up with your income statement for new stuff, I says how many customers are coming in, what's the average cost that a customer is going to pay, and now you do the same thing on your inventory. What's my average cost of inventory? So I always have so much money. I don't know where it's going to go, but I know here's my average cost. What's my average expense? It could go up or down depending on the usage. Okay. Okay, advantage of retail, again, profit loss statement. Costs do not have to be decoded. It means I don't have to list every single one. It just gives me an average cost. How much do I have to spend for my just to live in my house? Maybe $3,000 a month. What, 3,000? I got mortgage, I got tax. That's all an average cost. Electricity, everything else. Some months a little lower. Some months, if it's a cold winter, I pay more for gas. But my average cost, I kind of anticipate a little bit more. Okay. All right, and same thing for cost. You could go for the average cost. If the store goes in there, they don't want to see, here's my average inventory cost, and you have that. Normally, I have this much inventory. I don't know what it is, what burnt out, but the whole store burnt out. That's all loss. So now I could just go by average inventory, the average method, and the insurance will take that as an average. Okay. going to mark it down anyway, saying it's a brand. Well, yeah, the little thing is a new and everything else, but you get away with it pretty good. Advantages of it is valuation errors are reduced. Because you don't have to do each single one, just take an average. Process is a lot simpler. Profit and loss statement can be based on book inventory and gives estimate of inventory throughout the year. So you know how much I'm going to have on hand, especially if you're like a hardware store that has a lot. I should have at least had this much inventory on hand. Okay, determining inventory, calculating the cost complement. Again, we have this beginning, and we worked through that, where most of the students were, what, they're confused. Some did really good. But remember, this is the first time you were exposed to any of the financial. I do teach finance. I'm trying to bring it down to a level where you would understand it, at least conceptually. You don't know all the numbers, everything else. You're the soft. It's like a lot of people, if you don't know how to add well, well, or forget the adding. If I got to speak another language and I'm talking to somebody, I said, I don't understand, I know one or two words. I got this translated. I want to go to the bathroom. And it's in Spanish. Press it, and it kind of gives it close enough so that other person understands what I say. Some of the words may be different, but it works pretty good. Okay? All right. I got to see stock update with you. All right. Okay? And then calculating the deductions for the retail value, converting retail inventory into cost. You have to do that to, my cost and also the cost of the customer. And, oops, let me just go up in here. Calculating merchandise available for sale at cost and at the retail. And I'm not going to go into that. I'm just doing and storage calculation. A shortage of storage. Shortage of inventory. You could have theft. You could have employee theft. You have customer theft. You have accounting errors. When you have AOC, I forgot a senator from New York, when they said that New York had an accounting error, she basically thought, oh, accounting. Remember, nothing against her. I'm not in New York, but she doesn't have the experience. She's only, I think, Cortez. I forget what her name was. Because I'm in Illinois, I got my own problem. But if you look at it, when they said we had an accounting error of $2 billion, she said, we got $2 billion more. We could hire more people. It's an accounting error. I just made a mistake. I put the decimal point in the wrong place. The money's not there. It's an error. So if you would have someone, it always amazed me how some people become senators, they're elected, but don't have the experience. Hopefully she has a good staff that kind of helps her along with that. I'm not trying to, we all have to learn. But then, you got to be careful. I'm talking about who's telling me how to control my business if that person doesn't have the expertise. So you hire an accountant. You hire someone who has the financing. Or you have someone you're networking, or your partner knows more about the money side of it. Okay? All right, but that's an easy error. Or you made an error in accounting. I got $2 million. Oh man, I'm rich. I'm buying all this stuff, and find out we made a mistake. You don't really have $2 million in your checking account. You only have $50 in your checking account. You see, so you have to be careful what you're looking at. You got to say, I only have $50, and tomorrow I got $1 million. I better start buying. Where did that million come out? Did they make a mistake? Did the bank make a mistake? Did someone deposited make a mistake? Or when you put your deposit slips in, you instead of 10,000, you just add another zero because you moved it over. You weren't paying attention. Okay, all right. Limitation of retail bookkeeping is burdensome. Bookkeeping inventory correctly computed. Cost complement is an average. And remember, a lot of time point of purchase and everything else, the technology at least does it for me, but you have to look at the numbers and see, does it make sense? Same thing, if I give you $20 and I'm on the register, look at technology. I give you $40 and the cost, I give you $40 and it costs $35. I see $35 and I'm giving you $15 wrong. Did I put in 50? Wait a minute. I gave me 40. I'm giving it 50, and it's $30. I should be able to figure out. Wait a minute. I made an error because you put something in wrong. So you should be able to know your inventory, know your cost, and you're looking at your last year's, last month's, after your business is in business for a year, you have historical data from last time, and say this time I made sales of 50,000. This year I made 100,000. Wow, man, how did I? Oh, I doubled my sales. I'm happy, but my inventory was the same amount. What happened? Did I raise my prices? Did I make an error, or did the system make an error when I inputted it? Garbage in, garbage out. That's the way they say it. They don't say that anymore. They think everything is 100%. Okay, merchandising, forecasting, and budgeting. Forecasting, poor formula. how do I forecast what's going to be in the future? We talked about different trends, what merchandise I carry, how much I carry, what size, how much should I be costing, how much money disposable they have. If there's a recession, I got to change my thing. I got to break even. I just want to keep my business alive. I'm not going to make any money, but I'm not losing any money because customers don't have the money, they're not spending. So I have to give more promotional activities to get people in from a retail perspective. I have to understand the dollar. It's all about the dollar. I might have to lay off some people or tell them or cut their hours because remember, I don't have any customers. I don't need three people on the floor. I only got enough for one person and I'm barely making it. But you try to balance it. You're trying to help them out also. Okay, so what do we have here? Okay, so your dollar control, monitoring, inventory over time, and six-step process. And here's basically the steps, six-step process. Let me see, where's my line in here? Man, excuse me. All right, the six-step. Let me just. There we go. Designing the control units, you set that up in front. Your accounting will help you, or your vendor could help you. Forecasting sales, to tell you here's how many customers coming in on an average. The first year is the hardest. You're just making assumptions. And look, if it's a winter, you're not going to get as many customers. They don't want to drive. But maybe you're making it more on your e-commerce. So your brick and mortar drops, but people are ordering more because they don't want to go out or to eat. I mean, same thing with food. A lot of times I go out and have a good time for food. Wintertime, I just order out. So you see how you have to, and so how much, I still probably have the same inventory, but my expenses, how I deliver, or the logistic part goes to somebody else. Planning, reducing planning, purchasing, and making my profit margin. Okay, well, here's the line, sorry. All right, so now I go to the next one. Again, this is hardware store, and all these are just basically, the book just has the numbers. I know a lot of you are going, oh, you're getting headaches. I get a lot of students, I'm going into fashion, I'm going into marketing because I don't want to do the math. You may not have to come up with the math, but you have to understand the numbers. You still have to understand when you're selling, you're a buyer seller, especially your seller to somebody else. So you understand their profit margin, you understand their operations, how their building cycle, how much money they have. They may not be able to take all that. They don't have that room for the inventory. Even though you give them a good deal, I can't handle it. But you can say, okay, I'll give you the good deal, but we'll charge you a little bit more and we'll deliver it within 2 days. Just in time inventory on that inventory planning. Okay, open to buy again due to critical handling errors. Again, they just give you the whole thing: buying, marketing, all this stuff is involved with your inventory. Come on, this all a cost. Some people tell me I'm gonna go change my own oil. It's okay, why? Because it's cheaper. I gotta pay Jiffy Lube to pay $40 to change your oil and everything else. I could do it for 25. I said, did you consider your time going to the store? Did you consider the clothes at the time you have to do that? So that's costing you. Did you have to consider you got to wash your clothes? What are you going to do with the oil after you get it out? All those things are costs, and here they'll do it. And then when you look at the numbers and you say if the service is good, I said, man, okay, I could do it. But now, how much is my time worth? I'm doing minimum wages. I don't want to get my hands dirty. I got other stuff. I'm got to work in the car. I'll take it in there on the way to the work. I drop it off. They'll drop me off at my work because it's close by. Do you see what I mean? So you have to look at your time. A lot of people, when they do it on their own, and you may do it because you enjoy working in your hands. I do a lot of stuff with my hands. I help my son build and everything else. I don't mind that because I came out of construction, so I enjoy that. But you may not enjoy working in your hand. Your time is valuable. How much is it work? Is it easier to have somebody else do it and they do just as good a job, and maybe they pay as much, or you pay a few extra bucks and say, hey man, that's well worth it. Okay. All right, so you have that, no problem. And now the other thing, perpetual inventory unit. That means it's constant. It's always updating running totals of unit. It's giving you, look at perpetual inventory, similar to, so it always has that, always refilled and restocked continually. Look at your odometer on your car. It's perpetual. It's always changing, no matter what, how many miles. I may ride 5 miles this time, next time 20 miles, but perpetually I've got a running total. And this is a point of purchase system and tagging. Okay, so we've got that. Let's see, UPS scanner, it scans over. We talked about the UPC. I said, yeah, UCP. Trust me, I'm dyslexic, so sometimes I'll throw the acronyms, the letters around. People it's okay. I know what you know what I mean. The barcode. And now what's changed with the barcode is basically now you go with, for lack of better words, reordering the our radio frequency identification tags, for lack of better word. They got chips, so it makes it a lot easier. I don't have to have I just have the whole card, and if I scan that and it says you owe me $50, you don't even check it because it picks up all those little signals. And it's similar to when you look at your tire pressure. When that light goes up, that your tires will. I wonder how they do it. Is there a wire, the wheel spinning? It basically has inside your tire where you give the air just a little battery, and it's sending a radio frequency to your controller in your car, your computer. It's all computerized, and it tells you and it understands the pressure is already all done within the tire. So next time, just a word of advice, I had my tires done at Firestone here in Lake Zurich. They didn't tell me. They said it was working well, but then I was having one battery was weak. I said, how much? That's going to cost me $120, $5 for the damn battery, because you got to take it out, rebalance it. I said, oh man, I wish you would have told me, because if I would have known while it was working then, I would have replaced it. You know what I'm talking about? The car is older. I would have said, just for $5, you already got it apart, so it cost me another $50. Put all the new batteries, and then I'm set. I understand the cost for they're trying to keep the cost down, but you have to give those options to your customers. Otherwise, I'm an unhappy customer. Good service, everything else, but that really irked me. You know what I mean? Tell me about this. You don't need it, but if you want, most people, if you want to change it, here's how much extra for that. You see what happened? Because now I'm costing me more. I thought I was going to save money, but now I'm paying more. And some people say, no, I just want to keep the low cost. Don't worry. I would have took the game. I'm already spending $1,200 on a set of tires. So what the heck? What's another $50? It is $50, but it still works out better for me. Okay? All right. When the order stocks, again, you've got this figure, and it tells you the order. Here's the math. Just look at it. Don't worry about it. We talked in the class. The systems will give you. It's like when you order, a lot of systems will tell you, look, I know when I had to do an oil change. Okay, you already have so many miles on this car, or so many hours. Time for your oil change. So on my new pickup truck, they basically does that. My Subaru doesn't have that. It's a little older, but I'm not being tracked. No one knows anything on that. It's it's not that old. It's only about like 8 years old, but technology went on there. So whenever my pickup truck, I don't drive as much. When I have to change the oil, I'll just change the oil also on the Subaru. But it reminds me, flash, time for an oil change. My coffee maker, those of you, if you don't have the modern, you got a coffee maker, after a while it says time to descale it. I mean, they got to put some vinegar or some of that chemicals to clean out the calcium, or whatever that came in there. All right? So that's about it. All right, so I did the best I could understanding your limited knowledge of finance, so this is the first exposure. So there's a lot more. Don't be intimidated. When you open up your store, you try to find somebody that's an accountant, as a partner, or he or she, who has the better handle. And it's not only a store, in a relationship. Right now, and I'm being stereotyping, I'm generalizing. A lot of women basically handle most of the money. They do a check and everything else. So why? Because I could do it too, but they're more in tune to it. They understand that. They know how to manage their money. Not that men can't, but I'm just saying, so your partner, if you're a woman who spends too much and your husband's a tightwad, then, or your partner, you don't have to be married now, what I mean, you're just living together because you offset the costs and everything else. So when you're looking at that, and I'm trying to do one way or the other, it's just where the market is now. Marriage is down, but it's coming up again. But you figure a lot of people, it's easier to live together. A lot of older people, when their spouse retires or passes away, either one, they will live together to, like you would in a roommate, offset the cost. Because otherwise, if they come together, they lose the Social Security if you're the other person or that. And you still have it's a relationship as long as you care for the other person and you help something else. So when you're looking at that type of relationship, the same type of relationship, and that's only looking for the money. I mean, there's got to be some kind of a connection, I hope. That's only for the money aspect. But that's the same thing when you're bringing a partner into your business. Who has more of the in tune? But you should know what the other partner is doing, so they're not ripping you off. So when my wife's spending something, she's in the checking account. I don't have so much money. You know what I mean? But you have to be, you have to trust each other, and you have to work at it. In some relationships, I'm just going to throw that because I do personal financing also for Harper. Some relationships, basically, you both have their own checking accounts. I mean, that's fine. You may have access to my money, it's your money. I don't know. In a business, that doesn't make sense because you got to work together. Okay? All right? Doesn't make sense? Okay, so now I'm going to, that's my little tantrum there. And I'm not being a tantrum. No, what I'm trying to say, I try to connect to you so you understand, like it or not, the money is it's what you. Most marriages break up for cash flow or money. Most businesses fail because of cash flow, a lack of money. All right, not that because of the idea, not that I can't get along with the person. One spends too much, one doesn't. We have to be able to maintain it. All right. So again, my name is Dr. George Mochocki. Let's see how many minutes I have on here. And 34, just pretty good. And you notice it's one of my shorter videos because I just went over. I didn't go into the depth. If you want to, you could look at go Dr. Mochocki YouTube. I've got some financial videos that goes into a little more detail. But for this course here, you've been exposed to the finance. You've been you understand, and you're looking more at the inventory as your biggest cost, not only to your workforce, but your inventory because you got to buy 6 months in advance, and that's money. You're not making money until you sell your inventories. Remember, a farmer got to buy the seeds. He doesn't get the money to the year end. And then right now, okay, corn's going up, soybeans going up, but now we got China's not buying because of a trade thing. So now, okay, do I adjust my corn? I don't plant as much seed. But now the trade, Trump's. I think he's a negotiator. Whether you like him or not. Remember, I'm a business person. He's a money person. He's looking at the money. Let's cut the cost. Why? What's all this fluff? What are people? Okay, that's what you say. You're the government. You're giving me. No, he's looking at the money. He's looking at dollars and everything else. So that's someone that's going to bring our economy. That's why economy is growing because he's not overspending. He's spending, but he's still controlling his expenses. He's moving around. He's trying to save. Look, I'm just trying to say what he's doing as a business person is what you should be doing also as a business person for your own business, for your own home, for everything else. Look at the money. Look at the terms and conditions. That's all finance. Again, so my name is Dr. George Mochocki. This class is Marketing 106, Retail Merchandising, offered by Harper College. And this is a quick overview, and I'll see you for the next, I think there's a couple more chapters going on there, and or I'll see you online in the discussion board, or I'll see you in the classroom. Bye. 36.